Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. Today we're going to talk about Coinalyze, a charting tool that aggregates data across multiple exchanges and puts it all into one place. The main thing we're going to look at today is the aggregated predicted funding rate. We're going to use it to see how we can get some confluence on some shorter term time frame scalping strategies that have been developed. Try and think of other ways we can develop this, use this tool to develop other strategies, and use it as a leading indicator to show us when there's potential spikes in price and where that price could go based on which direction the funding rate is. Remember, if the funding rate is positive, then that means that longs are paying shorts to stay open in a perpetual futures contract. If it's negative, then shorts are having to pay longs. The purpose of this is to pull the price back to the index. The index price is the average price across many different exchanges. To prevent it from moving too far away from the index, the funding rate is designed to discourage these large positions that have pulled price away from staying open for too long, or even opening more positions or layering into their position, and more so closing them or going against them. Funding rate is designed to try and keep perpetual futures prices as close to the spot or the index price as possible. The reason why the funding rate is considered a contrarian indicator is because if a large position is open, they don't want to be staying on the wrong side of funding because it will cost them a lot of money. If you've got a several $1 million position open, then it's pretty safe to say you'll be going against that. So you can A, collect the funding, but B, also collect all the liquidity from the retail that's on the opposite side, or I should say on the side of the funding rate. So for example, if a big whale wants to collect all the liquidity below price, they see that the funding rate is currently positive, and they know that they could probably shake out retail by just dumping the price down after all the spike to the upside and create some sort of cascading effect which amplifies their gains. They'll probably do it because they're not only collecting funding, but they also know that there's a lot of liquidity below price, at least in the shorting case or the bearish case in this particular scenario. Let me show you a few instances of this in this video. Let's get into it. So today I'm going to have a quick look at the Coinalyze chart on the short-term time frame. I'm looking on the 1 minute right now. I'm just having a look at the predicted aggregating funding rate to kind of see what we can make of it. It's kind of cool to look at because basically what we can see is where these tiny little spikes are in the aggregating funding rate precedes some sort of price move. The contrarian in me generally would believe that it would go against the funding rate. However, you can see in some circumstances it goes with it. So I'm just having a look here at also the volume profile on the side, and we can see, you know, the point of control generally is a good spot where there's going to be sideways action, just because you would have had positions that would have got in here, for example, in a long, and then kind of got stuck and being underwater, and maybe we're feeling their heat, I suppose, and you know, when they come back up, then they just basically sell off that because they don't have the confidence anymore, and or something along these lines where they went long here or here, you know, here or here they went long, and then basically price went down, and then so as soon as it came back here, they were selling out of their positions just because they didn't have the confidence that we could move up anymore. So I mean, the volume profile generally shows these sorts of zones pretty well, these locked-in ranges, as I've discussed in prior videos before. Locked-in range analysis is just basically that concept where you have these liquidity zones, essentially, where price can get stuck for a lengthened period of time. And we're looking at the 1 minute chart here, so you know, this is a very short period of time. To be honest, this is about 5 hours, which is actually still a fair while when you think about it. So having a look at the 5 minute chart, just have a look at the volume for this entire price move and how we're kind of thinning out. So most of the participants that wanted to be a part of this move have already participated, and they are starting to maybe back out a little bit. It could also be because we're in the weekend, so that's generally when liquidity thins out as well. Just to remind you, the volume profile on the side here basically shows you using a horizontal axis trading volume. So you have normal volume candles down the bottom here, which show you the amount of volume that was transacted per candle, whereas this is the amount of volume that's transacted on the chart because it's variable and will adapt to what is on screen. It will show you at a price point how much volume was transacted at that level. So as you can see here at this particular price on the chart, 37.3 was a fairly highly traded point on the chart. As you can see, you know, we had quite a bit of trading happening, I guess, all around here. So that's just the volume profile, just so you can see that basically. And as you can see, as we go up in price, the volume profile is coming in. So the closer to this baseline here, the less volume there is. So you can see there was a very little volume traded around here. And generally with the volume profile, what can happen is, you know, if you are in a range like this and nothing really happens of significance, and say if we do fall, say, down to here, for example, it's very easy to fall straight through here because there's not a lot of liquidity in this big black hole here. So if we do fall past some of these high volume nodes, that's what these peaks are called, high volume nodes or HVNs, then there's just not a lot of support and we can easily fall down to the next one or the next one or the next one. These peaks generally tend to be points of high liquidity because you'll have either stop losses there or people will still have their positions there riding and we'll close them out at profit, or if they're underwater, we'll close them out because they are finally break even. So it can go either way, that's the concept behind the volume profile. Essentially, it's relying on that fact that people probably still have positions open. So as you can see, we're declining in volume. And again, that's probably because it's the weekend. But what that means is that this trend might be exhausting. And as you can see, we're starting to get the lower highs. We broke down below here. So, you know, it's interesting that this came like all the way back up here again. I'm guessing this is just your classic weekend sort of dead cat bounce sort of scenario. Again, we're looking at a 5-minute chart here, so understand that these are short periods of time compared to the typical 1-4 hour charts, dailies and weeklies that I usually tend to look at. So let's zoom in and have a look and see this predicted funding indicator and how it can kind of give us some sort of indication that there is a price move coming around the corner, and how it can help with confidence in regards to perhaps some low time frame scalping positions that you may or may not have taken. So have a look in here at the 1-minute chart. The resolution on this indicator is very good, enough to be able to see when there's tiny little spikes, because for example, we had this spike up, and in this case the contrarian play played out, because you can see quite clearly here we had this spike to the upside right here, and then what preceded it was a move down. Generally this will be big money or exchanges trying to rebalance, or you're trying to get back to the index price, or there's a number of other reasons as well. Also, the other thing as well is the higher the funding rate, the more that, in this case, longs will need to pay shorts the funding. So when the funding rate is positive, longs pay shorts to have positions open, and when it's negative, shorts have to pay longs to open positions. So if you've got a several $1 million position open, ideally, you don't really want to be long in these scenarios. I mean, it's not that big, 0.01%. It's not that big, but still, if you've got a few $1 million positions open, you don't really want them sitting open, just burning through every hour, charging the funding. So basically, generally speaking, it's pretty safe to say that you'd probably want to be either closing the position, but also why not hunt a whole bunch of liquidity that would most likely be sitting in these zones here that could create that momentum required to give your shorts the momentum ignition required to make a decent amount of profit off a very small percentage. So, you know, for example, there's a bunch of liquidity here. you know, they just push that down to 2.8%, for example, and that's all that was needed. You know, that's quite a bit if you've got a very large position open. But let's have a look here and see, you know, this doesn't always play out in the contrarian way, but it still can show you some places where we can turn around, basically, or where there's going to be a big spike in price, and generally it's kind of the opposite to where it's going. So, you know, in this case, for example, funding was severely negative, and I guess they just kept pushing it down anyway. But you can see this little spike here and this little push to the upside. It preceded a move to the downside. And again, here we have this big spike here. So there's actually a double-sided spike here. Get a Darth Maul sort of style, I guess, where people went long and then maybe they were stopped out or something like that. But this is the most significant part of this, essentially, this big spike. And then we went back up. So in this case, it's contrarian, you would say. In this case, it's not. Probably because you could say it is, because it's going against this candle here. So unfortunately, you can't go back very far with the 1 minute chart on Coinalyze, because it doesn't retain all of the 1 minute candles for very long. But we can still have a look and see some other instances where this happened. Unfortunately, there's nothing happened there. So there's one here, and let's see what happened. We had a move to the upside and then back down again, essentially. So again, like, move to the upside here, you can see the spike there, and then we move back down here. So if you're wanting to get into a long position or something like that here, and you can see the funding rate's pretty negative, I mean, you could say that is probably a good thing from the contrarian perspective, because you kind of want this to be negative if you want to go long, if that's what you're doing. But at least, you know, if you see these spikes, you know, hey, there's a little dip coming. Maybe I can get in long here, ride this up, you know, put my stop in at break even, and then maybe you just get stopped out here. So, you know, or maybe you take profit up here, because why not? Maybe there's some support levels here, which we can't see because the 1 minute chart, unfortunately, doesn't actually reveal a whole lot of historical data, but that's okay. This is just to prove a point. So how can we use this to give us confidence with regards to some of our scalping strategies? I mean, we can work on the 5 minute chart in this case, and let's just give ourselves that confidence boost we need to have conviction in the position that we're taking. So let's have a look here. We have a positive funding rate. It's quite positive on the 5 minute chart. And we also have this spike up here on the 5 minute chart, which was a pretty good sign that we were coming down, right? So this spike here, and just like this spike here to the downside, you know, is a pretty good sign we're coming back up. Spike here to the downside. I guess in this case it did kind of go down, but had to go back up. So let's just have a look at this example here. This is the 3-point div chain short that I've opened. So there was the one div to 2 dot, 3 dot with the chain connecting them. That's the 3 points div chain. One of the strategies in my scalping strategy video. If you haven't watched that, then please check it out. The link will be in the description below. So say, for example, we see this 3 points div here and we're just like, whoa, I don't know, should I take this trade or should I not? Well, generally speaking, I mean, these are the highest probability success trades. So I can understand not being sure whether you should take the EMA swing trade or the EMA, the momentum shift trade. I do get that. I understand not being sure about those because they have a lower probability of success. But these are much higher probability of success. I would say somewhere maybe in the 70 percentile or something along those lines. I have not gone back but to work out if this is the case or not, but I would say based on my own findings and based on my own win and loss rates and how much I've won from this strategy versus how much I've lost, I would say 70 is probably pretty fair. Some market conditions is more like 80, but you know, you're going to get losses with everything. So back to it. So you see that there's the 3 points div chain here, or the TVDC. Basically, let's just call it that, the TBDC right here. So there's a TBDC here and a TBDC here. You can quite clearly see. And you're not sure, you're like, oh, what should I do? Should I take this or should I not? I'm not really sure. Well, I guess, you know, probably you need to get on it sooner rather than later, because a lot of the time with these, you don't really get an opportunity to enter back. At least in this case, you did. So maybe you put your limit orders in at the top of your candle here. Maybe it runs and you don't get in. So be it. Doesn't matter. There'll be plenty more where that came from. You know, in a lot of circumstances, even with these, you know, the buy-in point, it comes down to revisit some lower levels. It's not part of the strategy to do that, but you can just sit some limit orders a bit further down while you go and investigate. You know, look on higher time frames, see what it is that's going on around you. And maybe you want to have a look over here and say, okay, cool, well, what's going on over here? Well, I can quite clearly see that the funding rate is overwhelmingly positive, which means that larger positions will probably want to be closing, or contrarian traders that generally have much more money than we do will be looking to dump against them. So because retail have weaker hands, so they're most likely to just close positions at a little bit of a loss and then create small scale cascading sell-off that can create nice 3% moves. So for example, we see a little buy spike here, and so, you know, we've opened up our trade. Let's just have a quick look where this candle is. It's the wrong chart. The entry candle was just here, so there's this little wick to the upside, and then that's basically where the 3-point give chain entry point was. So wick to the upside right there. Okay, cool. So you enter your short trade. Sure, no problems. Maybe you see this spike, right? You see this little spike here and you're like, whoa, look at that. And then maybe from this spike, you think to yourself, well, I have a lot more confidence about this trade now, so maybe I'll enter a little bit more. So you maybe add to your position, not financial advice, just a thought. The whole purpose of these is to take this information and try and formulate your own strategy based on, you know, some of this information and some of these tools. So you double down because you see this big spike here. You're just like, well, looks like these market makers, they're going to go for it. They're going to basically try and take all of these people out, because that's just kind of how it works, right? And then down we come, boom. And in this case, as you can see here, just clear this off. The profit points were right here, here, and here, and it hasn't really taken the last one yet. I would say at this stage, where's our stop loss based on this? Stop loss is still here. We haven't really formed a lower low just yet. So we're actually getting higher low formations on the chart here. Could be bear flag, not exactly sure. But as you can see here, there's a trend line forming here that's connecting these wicks down here on the 5-minute chart, remember, so this is very easily breakable. This one's also very easily breakable. But as you saw over here on the 5-minute chart, liquidity is thinning out pretty significantly. So, you know, we're getting quite a bit of gas in the tank for potentially a pretty high momentum move. I would say that we'll probably rip through the order book. At this stage, I would say probably to the downside, mainly because the funding rate is positive. And, you know, if you have a look back here, you can see most of the time when the funding rate is negative, so these people are all bearish. They think that the price is going to go down. What was the price actually doing? It was going up the whole time. And only when they gave up did the price actually go down, and people were going long, which I guess this is buying the dip, which was actually worked out pretty well in the end. But then as you can see there, it starts going up. It's almost like the opposite is happening essentially. So as this starts to come down, you know, that's probably when you know that the uptrend is losing momentum, when it starts to come back again. And there's probably going to be some sort of move to the downside coming soon. And that was this one here. So the fact that this has gone up and this has gone up, I would say that's the down move to accompany this. So based on what I'm saying, then does that mean as we're coming down here, people are going to start getting bearish and then the price will just go up. Well, that remains to be seen. If you're watching this in the future, go back and see if I was right. There's a chance that this actually might be playing out right now. Because especially as we start to get above these resistance zones, at least on the volume profile, you know, we don't have anything above here. There's just, that's price discovery essentially. It's not really, because when you look on higher time frames, like on this chart here, we do have some, you know, key levels above. We have the 50-week EMA just above, not too far from where we are right now, but that's like 10%. That's a pretty big move. And we also have the 618 above, which is 15% above where we are right now. So I mean, there's some pretty, it will require quite a bit of momentum to get us up there, and we just haven't really seen much of a correction here. I should probably turn this off so we can actually see what we're looking at. So I'm guessing we'll probably get at least 1 day in the red at some stage. And also, like, we've got the RSI kind of creeping up into this bear market resistance band. So, you know, we're kind of getting a little overheated, but we'll see how it plays out. But this is not a macro video. This is a short time frame video. So is there upside potential? Yeah, there is. I mean, the RSI is not completely overbought just yet, but maybe in the short term, we maybe track sideways, things get a bit more bearish, and then we start going up again as a possibility. So this is an interesting one. And so does that mean that the short trade should be closed? You know, maybe you can use that tool to try and work out, hey, should I be closing more of my trade in profit right now? Well, there's no clear signal right now, for example. So I don't see a spike or anything like that. You know, if I saw the volume candle coming down, right, like this, if I saw this, right, and then a spike to the aggregated funding rate to the downside, like something like this, well then, yeah, I would say it's probably time to start moving your stop loss. I mean, you'd probably be moving it to here anyway, to be fair. And if your position's up here and you've already taken a bunch of profit along the way, not a big deal, but then, you know, we kind of know that we're probably going to start heading back up again when this funding rate comes down below. It's kind of the flip points where you can start seeing where you can position yourself on the other side, because after quite a while of this bearish funding rate, eventually they're right. You know, a broken clock is right twice a day, right? So they can't always be wrong. And in this case, I guess they were right. But you can see all these volume spikes to the downside. A lot of the time were precursors to some larger move to the upside. So this is just another tool to explore if you want to try and find the indicator I'm talking about here. It's the predicted aggregated funding rate. So you can just type in AGG and then just click it here. Essentially, I've got mine blue and red, but you can change it to whatever you want. I like area. By default, it is a histogram. I just like area better. And you can turn a moving average on, but I mean, you can't really change the moving average. So what's the point? To smooth it out, oh no, there it is. And so I guess you could maybe try and think of something to do with that. I don't really know what you could do with the moving average on the funding rate. So for example, like the 21 simple, I think it's a simple moving average just because it's MA. Maybe when this crosses, there's something there, or go back and test if you really wanted to, but I'm not going to trade a moving average on the funding rate personally or do anything like that. But maybe there's something in that works for someone out there, and you could find some alpha, some sort of edge with this, but I don't see anything at a glance. So let's just turn that back off. So that's it for today's video. If you learned something from this video, then please give it a like, subscribe, and comment down below and let me know your thought on today's video. And remember, none of this is financial advice. This is just for education and entertainment purposes only. Take care, everyone, and all the best. This is Kryptolytix signing out. Have a good one.